Good morning, everyone. I'm Marv Eisen of Timeless Dollar, and today is Tuesday, May 10th. We're looking at Market Watch to see if there are going to be any announcements during the day that might tend to move the market, and today, May 10th, just two, neither one of which is going to move the market. So let's move over to the S&P. Now I'm going to look at the big picture first, and I want to call your attention to two things. You're looking at the S&P 15-minute chart, and this was yesterday, May 9th, and you'll notice that a window opened from 40.67 to 41.26, and another window opened up to 4,300 from 42.50. Now windows always close, but I doubt these windows will close anytime soon. This one may be a chance, but doubtful. Looking further at the big picture, here's the S&P one-day chart, and this chart goes back to a year, and look at where we ended yesterday at 39.92 or thereabouts, and to match that level we have to go back to the end of March of last year. So the market has given up all the gains over the past year. So now moving forward, what does the market have in store for us today? Well, looking at the future requires that we look at the past. So let's first look at the morning news. Now the morning news, the big story is stock futures rise after S&P falls to its lowest level in more than a year. And I called this to my readers' attention last night when I sent out my Trading Zone report. But this is not really news to anybody who's been paying attention. Futures are basically in the green this morning, but they had a really big fall from glory yesterday. So let's see what we'll face today. I want to bring up a point in this video that bears mentioning, and I'm going to refer to yesterday's chart. This is yesterday's S&P. This is a 3-minute chart, and just to call to your attention, there are 10 points between each horizontal line on this chart. 10 points. That's a pretty big swing. Now look at the volatility. Again, this is a 3-minute chart. In a 3-minute period, the market moved, well, at the open, it moved 15 points in a 3-minute chart. So if you are going to be scalping and you have high volatility, certainly no trend is observable here. If you are looking to scalp a couple of points, you'd be taking a really WAG, wild-ass guess, to make some money here because you're most likely to lose and lose it quickly. And why trade in an area where you can't see a pattern? In my course at Timeless Dollar, one of the things that I teach, and this is really common sense, but traders forget so often. One of the things that I teach is if you can't see the setup, if you can't see the price pattern, don't trade. Just don't trade, because there are so many trading opportunities, not necessarily that day or that minute, but there are opportunities down the road, tomorrow, the next day. You can make more money trading if you just use patience and wait for a setup. Look for observable price patterns. For example, yesterday, what do you see here? Very little, very little. There's certainly a trend, but it's highly volatile. Look at the price swings. In, again, 3-minute candle, 10 points rather between each candle, in each 3-minute time interval. 10 points. Significant swings. These are not really trends. Perhaps if I switch to a 5-minute candle, you can see something perhaps a little better, and you can see possibly a hammer here or a doji corresponding to an oversold stochastic, but not really a strong signal here. So if you can't see the pattern, if you can't see the setup, just don't trade. So many traders, they look to see which way they should trade. Should I buy? Should I sell? And it's confusing. And I know we all sit in front of the computer screen wanting to trade and being confused about what the market is telling us. In areas like this where you are unsure which way the market's going, or if the market is swinging wildly one direction than the other, just sit it out. Don't trade. There's no reason to trade. In one of the lessons in my trading course is if you don't see the setup, you shouldn't trade. There's always another bus. And Here are the 6 factors, the 6 setups on which you can base a trade if you recognize it. The gap, support and resistance trades, trend trades, trades based on price momentum, symmetrical or time and price trades, and basic candlestick patterns. And a strong one, I always say, is a hammer at the bottom of a decline confirmed by a stochastic. But if you don't see these setups, if you don't see the patterns, just don't trade. Do yourself a favor, you'll save yourself some money, your win-loss ratio will go up, and you'll become more observant of the market, and you'll make money more consistently. So that's my video for today. This is Marv Eisen for Timeless Dollar. Trade safely, use a lot of patience, and I'll see you in my next video. Thanks for watching.